This video is for Anton. Anton, this is not a scripted video. I don't know where it's going to head, okay? I just know I want to have a conversation with you because people near and dear to you that love you and you love them back, they're invested into GameStop. And I know you're invested into GameStop, but you're really skeptical and you don't see the value proposition for GameStop and why I call it undervalued, or why other supporters in the community would say, you know, this is the next grassroots movement. This is the best investment that you could make. And the reason why it's the best investment you can make, seriously, is because everybody tells you that it's not. You ever thought about that? You ever thought about the negative sentiment around the investment? There's a reason why media manipulates the information, and then in turn, it's not like this conspiracy theory. It's actuality. I'll give you the example. You know, back in the day, they used to call it a meme stock. This is like in 2020, they would call things meme stocks, like Tesla, things they couldn't explain, things they couldn't get you to jump out of. And after a while, Tesla took off and it ran. But now you have GameStop coming up, and it's taking off and it's running. And right away, they paint it meme stock. Well, guess what? That name and that title didn't really push people away. So the next part they're going to do is they're going to hit you where it really hurts. They're going to drop the price, and they're not going to give you guidance. They're not going to give you an analyst. So no one covers GameStop except for one analyst, and he's been wrong for the last 13 years on GameStop. But if I ask you, what is GameStop? Somebody's going to go, oh, it's that little company that sells used video games. What good are they? Not knowing that only 20% of the products they sell are used video games. So you mean to tell me 1/5 of the company is used video games? The rest of the company has room for expansion, growth, and of course, margin. And I'm not saying that digital is dead. I'm not, or physical is dead and digital is everything. I'm not doing that. What I'm telling you is there's a place and a part for everything. But we're looking at legacy. Right? You're talking about this, what was the company before versus what is the company now? Most people that invest in companies based off of value. Okay, what's the value? Or do they have billions of dollars under their belt? Do they have tons of debt? Are they going to be able to grow and expand? And growth is one thing. You know, I don't know how you value growth or actually how you chart growth. You know, people chart growth with how many stores do you open? They'll chart growth with, well, what is top line revenue? And they should be charting growth with how much have assets increased? You know, are we always just going to be a retail company, or are we a holding company? Could we buy some other assets and that increases our value? Because last I checked, value is derived from multiple things. It's not just at what you do at the till. So for like GameStop, if you want to think about the value of this company, 4 years ago, when everybody was talking about and battling with it, yes, they had no debt, and yes, they had assets, but they were sitting there with $1 billion of cash and $1 billion of assets. Well, that's around they were around $3 billion at the time, because they had a little bit more than $1 billion on assets, buildings and inventory and fulfillment centers. And you know what they've done? They've transitioned that whole idea, and now their assets are almost $7 billion. So to go from 3 to 7 in 4 years, they doubled their company size and value. No, they didn't make more stores. They didn't open more stores. No, but they increased their value. So you go, okay, it's gone up 100% in assets. What did liabilities do? Liabilities came down inverse under $1 billion. They literally have 6 to 7x assets versus liabilities. That's value. No one has given them the price to match their value. No one. Wall Street hasn't done it yet. A lot of that's called book value. Your assets minus liabilities. What's left over? Shareholder equity, aka book value. And this is why I harp on book value, because some people take out debt to increase their assets. GameStop hasn't done that. Some people leverage themselves, and then they can't recover because they don't have the cash per share and or the cash that's allocated for it. Like if GameStop wanted to pay off all their debt tomorrow, they could. They're cash rich. So they have $6.2 billion cash. More cash than Target, more cash than Best Buy. They're right up there with Costco, Walmart. They have more cash than Home Depot too, but they have more cash than every other retail company with the exception of Amazon, Costco, and Walmart. So they're number 4 in the world. Number 4 right here in the US for cash on hand for retail. That means a lot. That gives you a lot of flexibility, but I don't need the company to do anything more than just to sit on that cash, because that's actually the asset that's worth something. It's worth something to us, the investors. So what does $7 billion of assets and essentially zero liabilities, what does it give you? How much value do you get? How much can you leverage that on Wall Street? Well, when I go look around at book value for every other company in the S&P 500, they're all 10x. Hell, Palantir's 44x their assets. So, yeah, GameStop has more cash than Palantir, by the way. But, yes, GameStop has this ability to be leveraged 10x on their assets, and that would mean that they would be a $70 billion company. They should be trading in the range of around $100 a share. More than that, by the way. At $44 billion, it would be $100 a share. So they should be $150, $160 a share right now. I'm just ballparking numbers in my head. Maybe even closer to 170. But they're not. They're not there. And it's because they haven't leveraged them correctly. Wall Street hasn't. And they will. It'll take them years. By the time analysts come back to the job, because they don't want to be wrong. You know, some of these analysts, they get paid. Some of them. All of them get paid to have a stance and an opinion about a company. And God forbid anybody actually give a positive, on the company. But hey, if all these numbers don't make sense to you, let's not talk about numbers, Anton. Let's not get lost in the sauce. I get it. It's undervalued. But more than just book value, right? Well, who writes the book? As in, who's telling the story? Who's the leadership of your company? The leadership of the company is Ryan Cohen. Ryan Cohen is a billionaire, activist investor who has started companies, sold them off for profit. He's made the right investments at the right time, and he got GameStop to have a flip of $650 million on swing profit over the last 3 years. Nobody's going to tell you that. Nobody's going to tell you the transition that this company's made, but it's the biggest transition, all while the economy has been pumping a fake AI front, a bubble that you're stuck in. But no, this is not retail's time to win. This is not your time to expand. This is not your time to shine. Not yet. So I'm invested for the long haul. I'm invested for the 10-year. 10-year lookout on this stock and this company. You're looking at 100x investment. You are. You should be 10x right now. But 10 years from now, the amount of money they have and the options they have and the leadership they have, all of whom, insiders, all of whom have been buying shares. They recently just did more shares that they bought. Collectively, they bought over $100 million worth of shares, all the insiders. And they all work for free. They don't take a single dollar in pay. You're not working for free unless you understand the value proposition that's in front of you. And it's not just because, well, Ryan's a billionaire, he doesn't have to get paid. No, that's not the case. Those other guys are not billionaires that are invested in buying shares. Oh, they're millionaires. But everyone's here for profit. And you will. You get your profit 10 times over. And I won't sell a share of this company. I know exactly what it is. I know where it's headed. We've had these sit down, these powwows, community-driven company where everyone backs. Can you imagine? I'm just going to tell you something. Like, maybe you didn't see this part, Anton. GameStop did a partnership with PSA. And it's proof in the pudding type style, where they do a partnership with PSA and they tell PSA, hey, listen, we want to send your cards out. We want to grade them. And PSA is like skeptical of the whole idea. They're like, well, wait a minute. How many cards can you really send our way? GameStop sent over 1 million cards in the first quarter. I'm going to tell you guys right now, they are changing the business for PSA. PSA had to open up new centers. They had to hire more people. They couldn't even handle the influx. They had to change their wait times. They had to increase the price. They had to do everything they could just to handle what GameStop was doing. And the demand is there. It's not that they lost demand by making these changes. No, they increased demand, believe it or not. So if Ryan can show you and other businesses a model that, hey, I have access to the investment group that is GameStop investors, and these guys are rabid. They're looking for things to buy. Everyone says, well, they only have this many dollars in video game sales. Yeah, because they don't sell everything just yet. But if they did sell things, that people wanted to buy, mind you, the minute they started selling PSA cards, what happened? It goes crazy. Everybody's buying them. The margins go up on GameStop, and you see collectibles go up from 14% for the year all the way up to 20%. And you go, oh, wait a minute. They're selling an additional 6%. Well, that percentage comes out of somewhere. It comes out of video games. Great. Now we're transitioning. Now we're selling more. Increase your SKUs. Increase what you sell and see what happens. But don't be scatterbrained with it. You got to have this execution. And that's what GameStop's doing. They're executing at a very high level. But can you imagine Ryan going into a room and telling the next investor or the next category that they want to do, and they go, you know what? You guys want to see what we did for PSA? Look what we can do for you. And why? Because the GameStop investor, the GameStop consumer is loyal to the brand. Just do it under the title GameStop and you'll see everyone come running. This is the investment of your lifetime. The value's already there. It's not very expensive. It's inexpensive. And you're always early. You're always early. Wall Street hasn't priced it out correctly yet. They haven't even leveraged this thing out 10x on book. They're nowhere near it. So GameStop has plenty of room to run. We'll talk about the investors ourselves that have been in it for 4.5 years. The longer you're in something, the longer you're never going to get out. Anton, I don't know your time horizon. I don't know how old you are, and I don't know how long you want to hang on. But let me tell you something, young man. You won't get this opportunity again. It's GameStop. Can't stop, won't stop, GameStop. We're all going to be millionaires. Believe it. Peace.